It's the blog segment. The blog. The blog.
Oh, boy. I'm just soaking it in.
This is my alarm clock in the morning.
That's why you sleep in all the time.
No. That's why I get up and ready to kill the day. To take on the day.
This is the blog segment where I talk about what's going on in my office. Okay, and one of the things that appear at my office is
your book.
Well, this is my book, though. You kind of threw me off there, Jim.
I know, because you've been doing this to me all show. I wanted to throw it back to you. But ladies and gentlemen, remember, go to freeirsbook.com to receive your free book. But you were talking about what's going on in your office. And one of the most common things that's been happening in your office lately is
what happens in my office. Almost everybody has to tell the IRS how much money they make. Because a lot of times it's not how you're going to solve an IRS problem's not based on how much you owe the IRS, but how much is your disposable income, right? How much money do you make? How much do you have available? And that's what scares people all the time, because they say, I owe so much money to the IRS, there's no way I'm going to be able to pay them. And so then rather than try to address the problem, they put their head in the sand and hope it goes away. Well, it ain't going to go away. Right. And so if you're having an IRS problem, again, it's not always based on how much you owe. It's going to be based on how much you can pay them. And so one of the ways they go about trying to figure out how much you can pay them is this collection information sheet. And this is the IRS has two things that they do on almost everything, right? They have a form number and an acronym, right? So the CIS is a Form 433, and this is what us IRS lawyers use this lingo, okay, because it is the Form 433. There's a number of different types of Form 433. There's one for individuals, wage earners. This one, 433A, is collection information sheet for wage earners and self-employed individuals. They have a 433B, and that's for businesses and business income. And how are you going to? And what this is simply really a financial analysis of your situation. So you have to tell them, where you work, where you bank, how many bank accounts you own, what kind of property do you have? Do you have a retirement account? Do you own a car? What I always tell most of my clients is, they already know this stuff, right? All this is public information. What kind of car you drive, I could pull you up on Lexus. It'll tell me every car that you own, right? They know this stuff. They've done a report, a analysis of you, and they know where you live, and they know what kind of value the home has, and they know, they know where you bank, because your bank is sending information to them every year about any interest that they paid you, and they're reporting it to the IRS. So they know this information. And this is why it's so important that you're consistent and honest on these forms, because they know the answers already most of the time. So you have to be very careful about that. And so this 433 form is, again, it becomes really the central determining factor about how much money you're going to pay the IRS. Okay, so again, you're going to put all your assets down. And then it talks about expenses, and this is really where it gets kind of dicey, because the IRS, you could put all your expenses down, like everybody has a long list of expenses. If you start thinking, especially if you have a family, all the expenses that it costs you to live every month. What happens though is that the IRS has standards that they use. So it's not. So a lot of times it's not really based on your actual expenses, but the standards that the IRS thinks that you should it should be. So they have a standard about what your rent should be, for instance, and your rent might be higher than that. And so a big part of my job is fighting with the IRS about what is and what is not a reasonable expense. So again, sometimes you can overcome the standards. They could say, well, this is what the standard is, but mine is higher. So I can argue with them about getting your real expenses into this consideration. Because again, if they don't consider all your real expenses, then the number that they arrive at, which is what I'm going to have to pay them every month, this is called a disposable income. If that number doesn't reflect all of my expenses, well, I'll never be able to make that payment because then I have these other expenses that I'm supposed to pay. So, for instance, there's things that the IRS won't let you deduct. Credit card debt is one. So if you have a lot of credit card debt, and let's say my credit card debt is $1,500 a month, and I'm paying, that's just minimum payment, I'm paying $1,500 a month, and then I go through this 433 form, and let's say that's all my disposable income, $155, and I use it to pay my credit card. Well, now you can't use it to pay your credit card debt. The IRS wants you to pay them with that $1,500, and so you won't be able to pay both the IRS and that. Okay, so this is the big part of my job, is fighting with the IRS. And a lot of the negotiation, this is where it is. So it's not so much how much I owe the IRS, because that's kind of set in stone. They know what you owe. You did your tax returns. This is what I owe. This is how. And then this is how we calculate penalties. And I think we're going to talk about that next week, about penalties and how the IRS calculates those penties.
It's important to know the calculation.
Well, because it really adds to what your obligation to the IRS is. So I have a lot of people tell me, I could probably pay what I owe the IRS, but once they add on the penalties and the interest, I can't pay that. And that's common, because again, the penalties can really hit you hard and put you really behind the eight ball. And so we're going to talk about that next week, I think, about how the penalties are. But in the meantime, I talk about this form 433, and a lot of times what will happen is the IRS will send it to you, and you will fill it out yourself, and you'll do it incorrectly because you don't do these all the time. And this is really the central focus. This is where you really have to pay attention to what you're writing here, because whatever numbers if you put the number in, you show that you tell the IRS, here, IRS, I could pay $1,000 a month through my own calculations. Well, you're never going to get less than that. You probably have to pay more than that, but you're never going to get less than what you've just told them that you could pay. So you got to be very careful when you're going through this form, and that's why I think you need a professional who understands these forms to fill it out correctly and put the most accurate information in that form. Another form that they have, this 433 form, is also the 433D, which is the installment agreement. So once you come up with that number that you're going to pay them, you have this 433D. And on the back of the form 433D is a bunch of other agreements, other conditions. And I always tell people, you got to read this because these are the conditions that you're agreeing to. So for instance, you're agreeing that you're going to file your tax return on time and paying on time in the future. And that's a big part of the agreement. It's right here, but you don't read it. So always read this stuff. So anyway, this is Form 433A and B. If you need more information, you should give me a call.
That's right, ladies and gentlemen. There was a lot of information that was just given out there. So if you have any questions at all, you got to give Opem Tax Resolution a call at 312-664-6649 to visit chicagotaxteam.com. Again, you can solve your IRS problems, but you can only do it if you call Opem Tax Resolution and get the right answer. So listen to our sponsors. Come right back here on AM560
the Answer.